Markets under pressure with the Nifty once again flirting with the crucial 20-day moving average technical level.
Mid-caps and small caps face severe selling pressure with the small cap index down 1.5%. Overall market breadth is deeply in the negative with nearly 4 stocks in the red for every one which is higher.
Interglobe Aviation is the top Nifty loser, down almost 8% as operational disruption continues over the weekend and today. The company also has a deadline to reply to the DGCA show cause notice by 6 p.m. today.
As CNBC-TV18 celebrates its 26th birthday, industry stalwarts and market veterans ring in the opening bell from our studios. Veteran investor Ramesh Damani says we should get ready for the index in the 7 figures by 2047, compounding at 12%. Hello and welcome to Halftime Report, live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Batra and with me is Sonal Putra. Well, it's turning out to be a session which is definitely weak. We've started the week on a pressured note, you'd have to say. So we have the Nifty as well as the Sensex, which is just about lower. We have the Nifty, in fact, just about holding at around 26,000. And we have the mid-cap index, which underperformed last week. So there is follow-on underperformance this week as well, or at least we started on that note. The mid-cap index currently down around 1%. We have the small-cap index, which is under pressure as well. What stands out is a lot of the stocks which are in focus on account of news. So case in point would be Kaynes, which is down around 5%. There was an analyst call at 8:30 this morning. We have Indigo, which has lost 16% this month, and even Biocon, which was in focus post the board meet on Saturday. That stock down around 1% post all of that news.
Okay, yes, so those are the market cues, but the other cue that we are tracking is, of course, 26th birthday that CNBC-TV18 is celebrating, and we've had market stalwarts, we've got corporate conversations, CEOs joining us today, and we have a very special guest who's joining us in the studio today, the leadership of Ceat. We are now joined by Mr. Arnab Banerjee, who's the MD and CEO at Ceat. Thank you so much, Mr. Banerjee, for joining us in the studio today. We'll be discussing, of course, the industry outlook, auto sales. We are seeing raw material prices, the acquisition that just got completed, Camso acquisition. But first up, thank you so much for joining us on your birthday. It's always a pleasure speaking with you. And since the last time we spoke to you, there's so much that has happened. The GST cuts, that industry turnaround in terms of rate cuts and demand boost. How have you seen things changing as far as demand is concerned? 11% volume growth in Q2. What kind of outlook do you have for the rest of the fiscal and the next year as well?
Well, congratulations on your 26th, first of all, and it's a pleasure to be in the studio after a long time. We always speak virtually, so it's a change for me as well. Coming to your questions, I think, first half has been good. Q2, we had a 5% quarter-on-quarter growth. Q2 usually is a down quarter. September was a degrowth month in replacement because of the GST announcement. So the trade kind of reduced their stock levels. I had mentioned at that point of time that the impact of GST will come slowly in this industry because it's not an item which is bought every day. And we are seeing some early traction, I must say, especially in farm tires and two-wheeler tires, because these are spread over a large class of towns, etc. So we are seeing positive traction in demand, particularly in these two categories, also a little bit in passenger and truck tires. So I think it will be a good impact going forward.
Okay. Mr. Banerjee, thank you very much for joining in and celebrating our 26th milestone birthday. Just wanted to get a sense in terms of where the raw material prices are, because we do understand that they were largely benign last quarter. How exactly are they trending this quarter, and what does that mean in terms of margins for you?
Well, last quarter we had a 5% decline from Q1. So it was a big decline for us. But overall also, if you see the industry, there has been a decline. We think it will kind of moderate to a stable kind of situation in Q3 and Q4, maybe with slight decrease vis-a-vis Q2. But we won't have that kind of a delta again quarter-on-quarter is what we think. So therefore, it's generally positive as far as margin is concerned. Our margins have been 41% in Q2 too had been mentioning that whenever we operate at about 40 to 42% margin, we are comfortable in terms of the whole operating margin as well. So that's come in a good zone. And sales realization is also stable. It's not that the margins, the raw material prices completely going through to the market. So I think 40 to 42% margin is expected going forward.
Okay, so that's about the margin aspect. When you said things are looking good, or the replacement part saw some decline in September because of GST impact, but you still saw 11% overall volume growth that came by. What are your targets in FY26, FY27 once the acquisition also is completely coming into your books? You have international markets as well, which contribute to your P&L, and that is not impacted by GST cuts, but other macroeconomic headwinds that we've been seeing. Considering that, do you think you'll continue the growth rate that you have seen, or you will do better than that?
Well, our objective is to consistently grow in double digits, and we have been 11-12%. We would like to grow a little bit faster. If you see our value CAGR of the past, it's around 15%. So we would endeavor to beat that kind of a benchmark in the medium to long term, including next year. You are right, international business is a bright spot for us, and before the Camso acquisition, and about 19-20% had been coming from international business. Post the Camso acquisition, I believe it will jump straight away to 24-25%, and will continue to push this further up because it is value accretive, profit accretive.
And high margin as well?
Yes, absolutely.
Okay. Well, Mr. Banerjee, I just wanted to narrow down a little bit because the MHCV outlook actually, which you've given, is quite interesting. In the replacement demand, you're just about expecting, I think, mid-single-digit growth in the MHCV. And in terms of the OEM demand, you're expecting it to be absolutely flat to maybe 0 to low single-digit. So what's taking place when you talk about demand in the MHCV space?
Well, if you see the long-term demand outlook in MHCV, it generally mirrors the GDP growth, generally, right? And if you see sub-segments, construction is doing well, mining is doing well. And if the GDP growth has been 8% in Q2, and if that kind of trend continues, then mid-single digit is very much possible in replacement market. The OEM demand is cyclical, so it doesn't follow a flattish kind of pattern. So we have seen a down cycle with the GST thing coming up, so on and so forth. Maybe we are a little bit more positive now on the OEM demand on MHCV as well.
But you're concerned about passenger vehicles as a whole, or maybe just in the replacement space?
Replacement market has not expanded adequately in the first half of this year.
Okay.
And with this GST impetus, we expect at least for the smaller tire segments, there will be a positive outlook in the Tier 2, Tier 3 towns, like we have already witnessed for two-wheeler. That kind of trend could come in for passenger as well.
So net, what are you expecting as a whole in terms of replacement demand growth as well as in terms of, say, OEM growth for the second half of the fiscal?
Second half, Jan and February are again low demand months because of onset of winter in north and east. So taking into account the seasonality factor, I would say the outlook is positive from whatever we have mentioned in the past. It could give about 2 to 3% higher growth in second half vis-a-vis first half.
Okay. The other part of the business is balance sheet. You made this acquisition recently. How much would it add to the debt overall? And do you think there are more inorganic growth plans that you have? Maybe in any other space, EV tires, tires for EV segment, is that something that you're looking at and expanding into as well?
First, the balance sheet question. I think we are fairly comfortable in terms of debt equity ratio, which is about 0.6. Debt EBITDA is also 1.5-ish, so very much under control. Debt has gone up by 1,000 crores, Q2 on Q1 if you see. Our capex guidance is around 1,000 crores for the year. We at this moment stay with that guidance. So everything, even after Camso acquisition, is very much within our operating limits. So that's not an issue at all. Coming to the question of future acquisition possibilities, yes, we will be active in the market, but it's a matter of what is available and what we are interested in and what is our financial muscle at this point of time. But a short answer is yes, we'll be on the lookout of opportunity.
So is there any, you said interesting opportunities, anything specific that you're looking out for? And what's the kitty? With this, how much has gross debt come to, that 1,000 crore addition?
The kitty has to be balanced with our internal growth imperative. With this kind of a growth, double digit, we have to invest in brownfield and later on in greenfield expansion also. So the kitty is not a fixed kitty, it's a dynamic thing. And as we grow, the kitty will swell. So the money will be available, ratios will be benign, and we'll be aggressive for both organic and, if the opportunity permits, for inorganic.
Okay, just quickly before we let you go, what exactly are the inventory levels like as of now, and what are you anticipating in terms of festive demand, if you have to compare it year on year?
Festive demand has just gone by, so the inventories are a little lower than normal. We maintain 26, 27 days of inventory. It's a little lower, but not too much lower. We are operating at about 80% plus capacity utilization in most categories. So you will see a lot of brownfield investments accelerating going forward. And that there will be a regular capex guidance over the next few years for organic growth as well.
Okay, all right. Mr. Banerjee, always a pleasure speaking with you. Thank you so much for joining in today with your thoughts and the outlook going forward. A special day, so good to have special guests in the studio as well.
Thank you very much. 26 years is a great deal of time.
Yes, thank you very much, Mr. Banerjee, for taking the time out and gracing us with your presence. Thanks very much. Well, that is the management of Ceat talking to us. On that note, we need to take a short break. But on the other side, Manisha Gupta is going to be talking commodities. She has with her Sachin Jain, the MD at World Gold Council. Stay tuned.
"26 years of CNBC TV18.
Welcome back. Well, under pressure for the markets, so we have the Nifty, which is just about holding at around 26,050 as we speak, down around 140 odd points. We have the Sensex, which is split around 361 odd points as well. The mid-cap index has accelerated in terms of losses. So we have the mid-cap index, which should come up for you. It's at the low point of the day, down around 1.34%. And maybe the BSE small-cap index should come up for you to give you a sense in terms of how exactly that particular index is performing as well. So down almost 2 odd percent currently for the small caps. In terms of specific stocks, if you have to talk about a couple of these Nifty stocks, what seems to be holding its head above the water is a lot of the IT stocks. You've seen that outperformance come through, especially with the rupee depreciation and the hope that the AI trade is possibly not as aggressive. So we have stocks such as Wipro, which is up around 0.5%, HCL Tech, which is up around 0.4%, and Infosys Techem, all of these stocks which are managing to hold up quite well. On the downside, IndusInd Bank and a couple of others such as Geo Financial, Eternal, JSW Steel, all of these stocks from varied sectors are showing pressure at this point. We need to take a short break on that note with the news that the Nifty is just about holding at around 26,000. We'll be back with more. We'll get you that promised commodity stock as well. Stay tuned.
"26 years of CNBC."
Welcome back, and joining us on the show now is Sachin Jain, he's MD at World Gold Council. Sachin, hi, thank you so much for joining us on a very special day for us. And what a year this has been as well. We're looking at all-time highs in case of gold and perhaps the best yearly performance since 1979 with 60% of gains that we've seen in gold. How would you look back at 2025 and analyze on how have Indians bought gold this year?
Manisha, first and foremost, my heartiest congratulations. And I think you guys do a phenomenal job in bringing not just transparency, but information and legible and confident information that we can bank on. So congratulations to you for the great work that you guys do. With that, as you rightly said, 2025 has been phenomenal. We've seen, I don't have to repeat, an all-time high, over 45 all-time peaks this year. The returns have been phenomenal. And we believe that as we get into 2026, the fundamentals on which gold price has been based on are still going strong, are going to be in favor of gold, and that's how we see. And the changes that we witnessed is that a financial consumer in general, particularly when I look at India, is getting more sophisticated. There's more conversation, and not just conversation, but activity around diversification of portfolios, more transparency. If you look at the jewelry side, where of course we witnessed some drop in volume, but of course unprecedented up in the value that that jewelers are dealing with. I think they're getting ready for the next phase of gold, which is going to be 26 to 27.
Sachin, would you also say that the financialization of gold that we have been talking about all these years has started to make very, very strong inroads in mainstream investment when it comes to this year?
Absolutely. I mean, just if you look at this year, Manisha, the investment demand is going to cross $6 trillion. I mean, $6 trillion in INR terms means 18,70,000 crore worth of gold that got traded on a daily basis. Now, if you look at it, this makes gold as the most liquid asset on planet Earth. And it is, as you rightly said, the impetus on gold is an important asset class with every financial asset class investor is more and at the highest level.
The other thing I want to talk to you about is jewelry numbers, really, Sachin, because $90 billion worth of a jewelry market is what we are looking at in India in 2025, with various reports suggesting that it could head to $150 billion by the time we are in 2033. Would you say it is about corporatization of jewelry, organization as well, with various companies now looking at this with a different view, really, and the kind of buying that we've seen within India, whether it has been about with the way of wealth creation or millennials as well buying it?
I think, Manisha, a few things are happening in the jewelry space. First and foremost, we are getting more transparent. With the event of BIS and their activation around a unique HUID on every jewelry piece, takes up the confidence on the jewelry at a different level. That's number one. Number two is the interest in gold and the ownership of gold is high. Number three is, the way the brass tacks of India, the sheer disposable wealth in the hands of Indians is going year by year. And if you look at a 5 to 10 year perspective, we believe it's going to double. Now, with all of those elements, historically, we've seen every time an Indian consumer's wealth goes up by 1%, the interest to consume gold or consumption of gold goes up by 1%. And I think with those perspectives in mind, with one, what's happening at gold as an asset class, and secondly, with increased wealth creation and increased wealth in the hands of consumers, I think the next few years on gold will be very strong. I think as an industry, we need to do a much better job to relate better to younger consumers and millennials. And work is happening, but I think it's an ongoing pursuit of being the most aspirational sort of aspirational asset class for the younger millennial who wants to dress up.
Sachin, there has been said, and yes, with the kind of returns gold has given, it has clearly been mainstream. Almost everybody that we've had on the channel has spoken about gold in some sense or the other, and obviously giving higher highs expectations for the next year as well. But talk to us about the various age groups that are buying gold. One, we do understand the ETF buying is picked up, fund on funds as well. Via mutual funds, we've seen gold buying happen. And it was said at some point in time that it is only the older generation invests in gold and not the younger one. Have you seen that change as well?
Actually, Manisha, we've seen the folios in which consumers are buying gold ETFs and others. That's getting younger, and that's getting very interesting because I think it'll reflect on how we'll market our products and bring them to our mainstream. ETF, if you look at it, the starting of the year, our AUM was about 56, 57 tons. We've crossed 86 tons last month on the gold ETF bit. And I really believe that it's still at the cusp of a phenomenal growth because ETF as a product is still not completely has a popularity or the awareness on a mainstream India. And I think that will happen. That is what we'll witness in 26 and 27. What will work with the millennials is ease. What will work with the millennials is their ease to buy, hold assets. And I think that change of mentality in terms of holding assets digitally is going to be the driver. We've had over 9 million additional folios that have got added up on gold ETFs this year, which is phenomenal in terms of number of consumers who've come across. And as you said, historically, we were consumed by large or sort of generally by old age consumers or perhaps a certain above a certain age. But I think in the current perspective, the young consumers are driving the growth.
Okay,
all right. Sachin and Manisha, thank you so much for joining us today with that discussion and the outlook on what's happening with the gold market and prices as well. With that, we'll slip into another break. Rajiv Bajaj, the MD at Bajaj Auto, will join in on the other side of the short break.
26 years of CNBC TV18.
Welcome back. Well, a further fall. We are off 50 points from when we started the show, very close to that 26,000 mark. Remains to be seen whether we break that level or continue to consolidate above 26,000 or not. IT names. So Nifty IT was the only gainer in trade today. That too has moved into the red. So we have the likes of Infosys, TCS, all these stocks which are lower in trade right now. So watch out for that one. The other stock which is lower is Tata Steel. So a lot of pressure coming in on the metal side as well. So let's talk about which are the big movers in the broader markets. Vivek is here to take us through the stocks that are moving around in trade. Vivek.
Well, thank you so much for that. To put it mildly, it's a bit of a meltdown that we're seeing, especially as far as the broader end of the markets are concerned. Advanced decline ratio is extremely weak, especially has deteriorated in the last half an hour or so. In terms of individual stocks, very few stocks doing quite well. Canfin Homes, select NBFC stocks after the rate cut, they continue to move higher. Canfin being one amongst them. Policy Bazaar, continues to be an outlier, especially in the last week or so, has managed to move higher, cooled off a little bit from the day's high, but still in green territory. And Suzlon, over the weekend, the company did hold a manufacturing day, some positive commentary coming in on back of that stock too, after cooling off from the day's high, trading higher by around 1%. But on the other hand, quite a few stocks are, trading with significant cuts. The entire realty pack today, another day we are seeing very sharp cuts. Have a look at name like Prestige, Godrej Properties, almost 5% lower for both of these names. Eternal, we spoke about the block deal, but that stock too has cooled off significantly from the recent peak, down another over 2% today. Kaynes Technology, multiple clarifications coming from the management. They also held an investor call today at 8 a.m. But despite all of those clarifications, that stock lower by over 7%. Have a look at Indigo as well. Flight cancellations is something that all of us are grappling with. But a lot of analysts on the street have highlighted the fact that they're going forward, cost structure will be elevated, and the back of that lower by over 7%. And lastly, if you look at BSE as well as Angel One, once again, commentary coming in from the SEBI chairperson in terms of a consultation paper, both of these stocks cooling off significantly from the day's highest point.
Okay, all right. Thanks very much for that, Vivek. So those are a lot of the buzzing stocks at this point. We'll take a short break, but up next, Rajiv Bajaj, the MD at Bajaj Auto, will join in. Stay tuned.
"26 years of CNBC TV18.
Welcome back. Well, as CNBC TV18 celebrates 26 years of leadership, Parikshit is in conversation with Rajiv Bajaj, the MD of Bajaj Auto. Parikshit, over to you.
So what's going to be Bajaj Auto's game plan for 2026 in terms of EV launches, pushing exports and the overall growth of the company? Rajiv Bajaj is in conversation with us. Rajiv Bajaj, always a pleasure to have you here on CNBC TV18. We complete 26 years today. Give us a sense of your association with CNBC TV18 and the role that the channel has played in reporting on the automobile industry and the milestones of the automobile industry in the country.
Well, Parikshit, first and foremost, congratulations to all of you. And thank you so much for having me here on your special day. I must tell you that my first most significant business interview was on CNBC almost 24 years ago. So it was 2001. Govind did it. It was on the occasion of the launch of the Pulsar. So whether it's India, whether it's Bajaj, or whether it's me, the association goes back almost to the beginning of CNBC. And I can tell you from my experience, I like to call it the ABCD of CNBC. A for authentic, B for balanced, C for compelling, and D for delightful. Authentic because you're probably the only channel that doesn't this nonsense about source-based information. Everything is so credible. Balanced because there's always both points of view put before your viewers. Compelling because, it is said, discipline is repeating the boring brilliantly. So sometimes it may appear to you internally that what you do is getting boring, but to us on the outside, it seems brilliant because it is so finely honed, and finally delightful because there is always an X factor in what you do, from young Turks to future female forward and everything in between. It's a delight to watch CNBC. So, I've had a great 24 years with you.
All right. Thank you so much for your compliments and support, Rajiv Bajaj. Now, let me come back to the two-wheeler business. Now, with the acquisition of KTM complete and approved, how do you now plan to scale up in India and global markets?
Yeah. So first, let's take India. So in India, Parikshit, as you may be aware, for the last couple of months with KTM, we have pretty strong tailwinds, primarily due to the launch of new products. From the new Adventure to the Supermoto, most recently the Duke 160, etc. As a result of which, we have been now experiencing our highest ever retails in India. Also from India, in terms of exports, the new products are helping us to, move to the next level in terms of KTM volumes. And in fact, in that context, I must share with you that even in terms of exports to the US, which are not insignificant, we export about 10,000 KTM motorcycles every year to the US. Let me share with you something very interesting, that when confronted with the 50% tariff, Bajaj reduced the FOB price out of India to absorb most of this 50% impact. And yet we are able to export at a EBITDA that is greater than our 20% corporate EBITDA. So this is not about the power of KTM or the power of Bajaj. This is about the power of India. It is so cost competitive to manufacture out of here that really more of us should be taking this strength out, to other markets. So that's about KTM in India. As far as KTM globally is concerned, I said to you when we spoke the last time that at the heart of the turnaround globally is going to be, the concept of less being more. Less in operational terms, in the sense that KTM was brought down by this 12-month plus inventory that had piled up in its network.
Right.
So I'm happy to say that, retails are on course. That inventory is more or less depleted now, will be at the end of the year. And even strategically, it is about resetting the brand. Less is more. Get rid of the bicycle business, the car business, the smaller brands like MV Agusta, etc., and just focus on KTM Husqvarna going forward. So with this less is more approach, I feel quite confident that we are on the right path for the medium term.
How do you plan to increase your market share in ICE two-wheeler segment in India? What's going to be the game plan for 2026?
Well, when it comes to ICE two-wheelers in India, Parikshit, basically it's about motorcycles for us because we don't make ICE scooters. Within that, our focus has always been on the 125cc plus space. And as Rakesh shared with your colleagues just ago, whatever we are doing now in product and marketing terms is already yielding results. Between August and November, our share, as we calculated in the 125cc plus segment, has grown by 2% already. And I think, I just told you that 2001 was the launch year of the Pulsar. So next year is the 25th year of the Pulsar. And you will see that it will be the year of the Pulsar. Already as we speak, we are rolling out the first wave of new products, which will be reaching dealerships very soon. And you will see wave after wave of new stuff coming out of the Pulsar platforms all through 2026. And since in the domestic market, Pulsar is like 2/3 of our volume, I think if the new Pulsars do well, then this is going to be the primary basis for share gain in the domestic market.
Any investments in bikes over 350cc, considering that the government has hiked the GST there?
Well, I'd like to start by saying that I certainly hope the government will reconsider what it's done. And without dwelling on it too much, clearly this action is going to marginalize motorcycles above 350cc in this market. And if that happens, then it greatly handicaps the manufacturers from developing such motorcycles and taking them out to the world. So I sincerely hope this will be reviewed. Meanwhile, our plans continue unchanged for now, Parikshit, because I don't know how many people are aware that when it comes to, and we measure it as 250cc plus, not just 350cc plus. So in the 250cc plus segment, between our like Pulsar, Dominar, KTM, and Triumph, we are neck to neck with Royal Enfield in terms of export leadership. With 4 brands across 108 countries, there is no reason for us to kind of put our plans on the back burner because of a domestic adversity. But as I said, I hope that will be relooked at. So for now, in terms of both development and investment, our plans remain unchanged.
"26 years of CNBC TV18.
Welcome back. Well, Kaynes Technology, the stock which has lost around 25% of its market cap this month itself, is down another 8% today. And this is despite the clarifications which came in from the company in an analyst call this morning. We do have Upasana joining in with more details on what they exactly detailed to investors and what the key questions might have been. Upasana.
Well, the stock continues to see a sharp decline today as well. Mind you, last week, Kotak had raised some serious concerns in terms of company's balance sheet and cash flow concerns, questioning the company's overall revenue growth, excluding its smart meter business. Now, company today had held an investor call in which it clarified on the various questions that were raised by the Kotak, in which the company said that the presented financial statement is relevant and reliable, has been presented in a reliable manner. There are no inconsistencies and most of the implications are not valid. It says that the Kotak's entire report is based on one small omission that was mainly a typo error in one of the submissions in which the company had omitted some subsidiary related disclosures in which the company was face the heat in the Kotak's report. It has also said that there was just one mistake of not mentioning in the notes to accounts of a related party disclosure, which was duly corrected now. Now, company has also mentioned that the working capital intensity, which was one of the main points highlighted by the Kotak, it says that it is a very typical for every EMS player to face such a high working capital. Taking various measures to improve it is what the company is indicated. The smart meter business also contribution to the total sales is trending down, and the other businesses are also showing strong growth rates is what they've indicated. The growth of other verticals such as industrials, automotives, railway, they are seeing a fairly strong growth now onwards, and it believes that going forward the company's reliance on its smart meter business will come down substantially is what they have highlighted. And lastly, they've also said that the no promoter stake sale is on the cards as of now. So these were mainly the key highlights highlighted by the management in response to the Kotak reports.
Okay, all right. Thanks very much for that, Upasana. But now let's go across to Manglam. He joins in with the F&O setup on what is a weekday. Manglam, over to you.
Well, the indices are lower, no two ways about that. The Nifty Bank, the mid-cap index as well. And with the indices being lower, what's also higher is the volatility. So the India VIX comes up for you. That's up around 3.5% as well. Bears will take heart from that, not so much the bulls. And bears will also take heart from the advanced decline ratio, which is firmly in favor of decliners right now. Over 2,000 stocks in the red for just about 700-800, which are in the green. The Nifty 20-day moving average at 26,000 is holding out, and that is something that the bulls will monitor very, very closely. The other thing that bulls will monitor is the range that the option writers are playing for as well. We've seen writing at the 26,100 call, the 26,200 call, telling you upwards of 26,150 to around 26,200. There would be some sort of supply coming in, but they still have heart of the 26,000 put, which is seeing a fair amount of writing. At some point, this call writing and put unwinding will go into the favor of bulls because the put call ratio has now moved to 0.75 versus 1.18. Typically around 0.65 to 0.7 is where it bottoms out. So we'll monitor that. And alongside that, a couple of stocks, a lot of short positions added on Interglobe Aviation. The stock nearly 20% away from its 52-week high, continues to see some selling. And Hitachi Energy too has seen some selling, so short positions added out there.
Okay, all right, Mangalam, thanks very much for that. Well, on that note, we need to wrap up on Halftime Report. Business Lunch will take all the action forward.
"26 years of CNBC TV18.